So welcome to our today's class. That is financial reporting and analysis. For today's class, we'll be talking about partnership. But our concern is just on conversion of partnership into a limited company. Partnerships, but I'll say our concern in this case will just be on what we call conversion of partnership into a limited company. Now, on the partnership, this is what you need to know. When I talk about partnership, this is where two or more people or business organization where two or more people pool resources to do business as one. And in partnership here, we know these partners are brought together through what we call our partnership deed. Are we together? And the partnership deed, remember in financial accounting, we say partnership deed or partnership agreement is what makes or what partners agree on how they're going to do the business together. Are we together? So in this case, our concern is not for the one that the financial accounting. This one is now more for advanced, where we just be talking about the conversion of partnership into a limited company. However, previously, there was also another part that we were supposed to talk about here, which was dissolution of partnerships. When I talk of dissolution, this is now a topic that was taken into financial accounting for the CPA. So just write and say partnerships. Partnerships is where business organization or is a type of business organization, just right, is a type of business organization where two or more people, the type of business organization where two or more people pool resources, and share profit and losses in the and share the profit and losses with the terms of the agreement. That is what we call the partnership form. That is through the partnership deed. Partnership deed. Now, our concern here, as I've said, is on what we call the conversion of partnership into a limited company. Limited company. Conversion of partnership into a limited company. Now listen here. You are doing a business as partners. So you decide to convert this partner into a limited company. Are we together? So this means that you will have to close the partnership and then you open what? The limited company. So in our case here, what we need to know, how do we close the books of the partnership? And then how do we open the books of the limited company? Are we together? So you write and say on conversion of partnership into a limited company, and write and say, this is where a limited company purchases the partnership business. Purchases the partnership business. See there, yeah. This is where a limited company purchases the partnership business. Where a limited company purchases the partnership business. Also, what I'm saying, two sets of accounts shall be prepared. That is in partnership books. in partners books, and number 2 in companies books. What you mean in this case for the partners, you are closing the books of the partnership. These are in the company books, you are opening the books of what? The company, right? The parties consideration shall be determined. Parties consideration shall be determined. Parties consideration shall be determined as follows. Parties consideration. Now, to get the parties consideration, we'll take the asset taken over. Yes, that way you add the goodwill. You add the goodwill. And then you less the liabilities taken over. Less liabilities is taken over. You learn that what you get here is now what we call in the parties what? Parties consideration. Parties consideration. Parties consideration, or what we call the equity. Parties consideration, or this is now what you may call the what? Equity. What you may call the equity. Now, if you want to get the goodwill here, goodwill is normally given by the parties consideration. Parties consideration, you minus the net assets acquired. Net assets acquired. Parties consideration, you minus the net assets acquired. That is how, in this case, you get the goodwill. Now, how do you get the net assets? Yes? We know it's total assets you minus what? Current liabilities. That is how you get the net assets. Total assets minus the current liabilities. Now, let's talk about account prepared. Account prepared. One is what we call the business purchase account. Business purchase account. Business purchase account. And this is how you maintain a business purchase account. This is how you maintain a business purchase account. So you just have the assets taken over. The assets taken over should be, no, this is like there. So you suppose have them on the debit credit side. Liabilities taken over. Liabilities taken over. This will be the assets taken over. Then we add the goodwill. And then here we also have purchase consideration. And at the end of it, the business purchase account, in this case, should balance. This purchase consideration is also what we call in the so it should balance. It should balance. Write down there and you say ND. Say any expense incurred prior to the formation of the company. Any expense incurred prior to the formation of the company. Any expense incurred prior to the formation of the company. Prior to the formation of the company are called preliminary expenses. Are called preliminary expenses. Preliminary expenses, which should be capitalized, which should be capitalized, which should be capitalized and amortized, which should be capitalized and amortized over a given period of time. Over a given period of time. Over a given period of time. Now, the second account that we are supposed to maintain here is the partners capital account. Capital account. Partners capital account. And number 3, the vendors account. Vendors account. That is just the purchasing company account. Company that is purchasing this partnership. Are we together? Now we can have an example. See, we have an example. May 2016, question number 3. May 2016, question number 3. May 2016, question number 3. Yes. Pay the off. You've seen that. Pay of our partners. May 2016. Yes, pay and off. You'll be keen on this conversion of partnership into a limited company. Or there's a question that you expect the sitting coming of December. Now, pay and off were partners in a business of manufacturing and distributing construction materials, sharing profits and losses equally. The partners agreed that with effect from 1st January 2016, the business be split off and transferred to 2 separate companies. That is Mabati Limited and Nyumba Limited. Mabati took over the manufacturing business while Nyumba Limited took over the distribution business. The statement of financial position as at 31st December 2015 was as follows. Was as follows. We've been given the non-current assets where we have land and building, motor vehicles, equipment. Current assets, we have cash in hand. We also have account receivables, inventory. We have the capital and liability where we have the capital for pay and loan. We also have non-current liability bank loan. We have the current liabilities where we have bank overdrafts, account payables, and then additional information. Mabati took over all the non-current assets and cash, bank overdraft, and its share of account receivables, inventory, and accounts payable. Nyumba Limited took its share of account receivables, inventory, and accounts payable. The assets and liabilities were transferred at book value, and the partners were paid 100 million, being goodwill for distribution, and 80 million being goodwill for manufacturing. Are we together? Yes. So in that case, I think there was a mistake there. 100 million should have been goodwill for manufacturing business. So take that. 100 million should be goodwill for manufacturing. 80. Yes. We need to know that. The bank that provided the loan agreed to accept 14.4 million, 10% debentures in Mabati, and 9.6 million, 10% debentures in Nyumba. On 1st January 2016, purchase consideration was settled by allotment of fully paid shares of shillings 20 each in the respective companies as follows. We are paying given 23,750 shares in Mabati and the balance in shares in Nyumba. 15,920,000 shares in Nyumba and the balance in shares in Mabati. Mabati also raised a 12% debenture of shillings 200,000 on 1st January 2016 and paid off the bank overdraft. The expenses incurred in raising the 12% debenture amounted to 7 million. Mabati Limited and Nyumba Limited also issued 1 million and 1.5 fully paid ordinary shares of shillings 20, respectively, to corporate investors, A Limited and B Limited, on 1st January 2016. None of the company has amortized the goodwill, and the formation expenses were paid by respective companies as follows. We've been given there. Are we together? So we are required, Roman number 1, the business parties account. Now, business parties account, remember, I'm saying in this case, we will just take the asset taken over, purchases consider, which in this case mainly it will help us to get the purchase consideration. So, because in our case, when we look at additional information number 3, 1st January, the purchase consideration was settled. However, they've not told us what was the purchase consideration. But purchase consideration from the format, remember this is what I've said. Is asset taken over, you add the goodwill, you let the liabilities taken over. And that is why if I take this, I add this, I minus this, to give us the purchase consideration. So it's out of now preparing a business purchase account. So I'll begin with A, which is the business purchase account. Business purchase account, and here we have in 2 companies, right? Yes. So Mabati, then we have Nyumba. So this one will also have Mabati. We also have Nyumba. Shillings in our case are in thousands, so I'll have shillings in thousands. 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 Now, We know what are assets. So we begin with assets. Go to the non-current assets. We have land and what? Land and buildings, right?
Yes.
What is the value of the land and building?
200,000.
We were told on additional information number 1. Mabati took over all the non-current assets. Now, so the non-current assets, all of them were taken by Mabati. So this of 200,000 is Mabati. The other one is how much? Motor vehicle. Motor vehicle of how much? 150,000. Was also, that is an non-current asset and also the equipment. Right?
Yes.
Equipment was of how much?
33,000.
33,000. Right? Go to the current assets. We have, he also the one who took the cash in hand, right? Cash in hand was of how much? 1,000. We were also told that he also took his share of account receivables. So receivables, he took his share. What was his share?
Receivables.
120. Here you are in manufacturing,
Yes.
which is 128, meaning that now the other one was taken by who? Nyumba. Of how much?
Manufacturing. Distribution.
Yes. 216. We also have inventory. He took his share, which was of 460. Then Nyumba took of how much? Distribution. 225. Right? We also have the share of what? We also the one who took bank over. Bank overdraft. Remember that is a liability.
Yes.
And bank overdraft was of how much?
169,000.
It was also taken by. But we also have the account payable. So what was the account payable for manufacturing?
308.
Was taken by Mabati, right?
Yes.
And the other one for distribution by Nyumba, 52,000, right? There was also the goodwill now, which we were given on additional information number 1. The assets and liabilities were transferred at book value, and the partners were paid shillings 100 million, being goodwill for that one I've said is for manufacturing, the other one for distribution. So I have also the what? Remember we said also we created the goodwill. Goodwill here is 100 million, which is 100,000, and this is 80,000, right? Then what else we have? What else do we have there? Now, yes, on additional information number what? 2 again. Additional information number 2. You know that is a non-current liability. We've been told that the bank that had provided the loan agreed to a debt 14 million, 10% debenture from who? But so we'll also have debenture here. It's a liability, right? So we are to go 14.
14.4 million.
Which is 14,400, and number of how much?
Number 29.6.
Yes, when you get that total, what is giving you 24,000 of the non-current liability bank. Yes. So having that, we don't have anything else in the trial balance, so we can balance. So what is our purchase consideration? is the purchase consideration? Naiden, umepata hivyo? Umepata ngapi?
That is right.
The total here is how much?
Five. Oh, no. I'm giving you four. I'm giving you the wrong one.
Is how much?
I should say
1072 here. The total here. 1072. These are done for the number 520. So this is 1072. This is 520. So what is our purchase consideration, which is not the balancing fee you are getting now? 570. 459. Alright. So that is the purchase, business purchase account. By doing that, you have the term of the 6 months. Secondly, also you require to prepare the partners capital. Nini utaandika?
what is the budget?
The balance is the balance. 570. Yes. Okay. Now, partners capital account. Now we have two partners here, right? We have two partners here. There is one, two. Faith and hope. There is faith. There is hope. Faith. Hope. We know the balance pronoun. Remember shillings and thousands. Don't forget that. Shillings are in thousands. Shillings are in thousands. So what was the balance breakdown from the capital account? On the trial balance we were given there, the balance is breakdown. Capital for faith was 520 what? 520. 6,000. For all was what? 324. So this is the capital that they were having as at the beginning. Come on. Are we together? Now, when you look at our statement there, to review our shares. No, basically here, the purpose of preparing the capital account, after this business is converted into a limited company, we want to know what will be their balances. Ama pesa yao yenye wanadai itakuwa imeisha. Are we together? Are we together? That is now the purpose of preparing this capital account. As at the end of that partnership, will there be having end balance to those partners? Now, when you look at the additional information number 3, let's go there now. Additional information number 3. Additional information number 3. You there? Additional information number 3. On 1st January 2016, the purchase consideration was settled by the allotment of fully paid ordinary shares. Allotment of fully paid ordinary shares. So this one was settled by issuing shares to the what? To the partners. Are we together? And then we know the purchase consideration for Mabati is what? 570. And this one is how much? 459. So I'll just have a working here to know what are the shares that were given to the faith and all. That is from Mabati and also from what? Nyumba. Are we together? So this is what I love ordinary shares here. So I can have it this way. I will have here for Mabati. And we will also have here for Nyumba and I can have for Method. Nataka kujua hizo shares how they were distributed. How the shares in this case were distributed. Ukisoma on additional information number 3 now. Let's get to that number 3. In each of the respective companies as follows. We are there? Now, pay 23,750,000 shares in Mabati and the balance in shares in Nyumba. Are we together? Balance of shares in Mabati and the other one is in what? So what does this mean? These partners are getting shares in both of the two companies. Are we together? So how will we be able to arrange that? In this way, you find that we know the shares that are going to Mabati. Okay, this one, let me just have it as paid. Let me just have huyu akiwa paid na huyu mwingine akuwe nani? So that here we know the shares from Mabati. Mabati, we know the purchase consideration that is supposed to be settled is of how much? 5? 600. 600. Ndio. Na huyu mwingine Nyumba, the purchase consideration we know is of how much? 59,400. Awesome. That is what we need to know on that. We're not going to divide by 20. See in the share capital. Because they were issued at a price of 20. you erase your amount. Are we together? So now let's begin with the first one. Faith. 23 shares in Mabati. Okay.
Let me ask a question. So how do we apply the 20 shares here? How did we come up with the 20 shares?
23?
72.
See the share price of this meaning. So okay, this is what remains. The shares the faith alipata. I'll just take that 23,750. You multiply by what? The 20. The balance sasa ndio tutajua kutoka hapa ibaki ngapi yenye ilienda kwa yenye tunaambiwa ilienda kwa nyumba. Ilikuwa hapa silikuwa. Let's have nyumba and mabati ya geni. Ndio hapa tukienda hivyo mtapotea. That is number. Let's now understand this video. Now this is the purchase consideration. Are we together? You are settling the shares of who? The shares of Mabati. Are we together? So what happened in Mabati? 23,750 shares were issued to faith. So what I just take here, take 23,750 multiplied by 20, and then I spend that. 3,750. 470. 5. It's only 7,000. Because we are using those. Go for more. The reason we want to settle this purchase consideration of property. Now this is what I'm saying. We want to settle on this purchase consideration because when you look at additional information number 3, on 1st January 2016, the purchase consideration was settled by allotment of fully paid ordinary bonds. Yeah. And this is the purchase consideration of Mabati. Are we together? Yes. So meaning that for the Mabati we want to know this 5,760 will be settled by issuing shares. Once I see tunaambiwa zinaishuiwa nani? Faith. Are we together? So the balance you tumeambiwa, you will get it from what? And the balance in shares in Nyumba. Are we together? So meaning that now Faith, there are those shares that you now get from what? Nyumba. So what will happen here? This balance here of the shares is going to Nyumba, which is now what we have in on additional information number 2. Yes. Are we together? Yes. Hapa ni Kizungu. Yes, Kizungu. So what I'm trying to mean, this one, you will issue shares to Faith. Are we together? So the balance of the shares zenye zinabaki zinaenda kwa nani? Okay, this is the amount that you have. Yes. 576. Yes. You have issued shares of 475 zikaenda kwa nani? Kwa Faith. The balance will go to Are we together? 475. So we've got 95,000. So this one I will have 95,600, which will be given there as the balance in shares in Nyumba. 475. The share. If you are paid, unless so in a shares, the share price. You come mnaelewa pia. Ngoja twende pole. Share price is equal to in the share capital. That is where I was lost. Now we have understood that. So now Faith took 475 shares in Mabati. And balance of her goodwill. Yes. To Nyumba. So that's okay. 475. That's fine. Yes. From there, that's what they were given as their payout.
They're paid. Happy out.
No, nataka pale niandike tu pay or off na pay.
The format, are you saying shares share?
Shares multiplied by the share price to
Get
get
the capital.
So it means you say,
Na mimi
ama niandike hapa off.
Mimi nimeandika pay na
tunasema you can write what you vile unaelewa. I think the most
Yeah, the most
important
important
one
thing is
to
for you to
what I
understand.
am not understanding here. Just
Mhm.
say it goes to 750 shares in Mabati, which translates to 75.
Okay.
The balance of the share. How do we get this balance?
Okay, let me make it easier for you.
Don't answer the.
Okay, I just want you to understand it better. Nikishindia hivi mtashinda hapo. Now this is what I mean. This is Mabati. This is our purchase consideration. Are we together? So Mabati is having 570 or 600. Kwa pamoja. So he will issue shares to Faith of 2750 at 20. So meaning that Faith will get out of this amount atapata forward. Ile balance imebaki ya shares ndio tunaambiwa zinaenda kwa nani?
Kwa Hope.
Oh. Ndio hapo chini umeambiwa hapa.
20 kwa nyumba 15920 then 20. Then Hope got now 318,400 from nyumba.
Kuna kitu amwelewi. This is what the way inasema 23,750 shares in Mabati Limited. Are we together? So yeye za kwanza hizi ndio atapata kwa Mabati.
Yes.
The balance ya shares zake atapata kwa huyu nyumba. Sijui kama mnaelewa. Are we together? Sawa sawa. Then huyu tunaambiwa tunaambiwa he will get 15,920 in shares of what? Nyumba.
Nyumba.
So we know nyumba here is 459,400.
Yes.
So meaning that the share that I will have here is for all.
Yes.
So the balance is now what you will get equal. Pay.
Yes. So Hope there gets
So
318,400.
this is 3.
Yeah.
318,400.
Yes. So the balance we allocate to him.
Balance is for Faith is out 140. 1,000. So ni kumaanisha what is the total shares mwenye nani hapo nazo? We want to know the share capital. Faith atakuwa na ngapi? And then Mabati will also be having how much? Tukitumia nyumba hapo
Faith atakuwa na
616.
Yes.
Mwingine? I'm hoping now you've understood what we do. 414. So what does that mean? This has reduced the what? You wamepewa shares. It is reducing their capital.
Yes.
Are we together? So through the ordinary shares. Ordinary shares. So tuanze hapa na Mabati. Mabati amepea nani ngapi? This 475. No. Opa amempea 95. Ndio. Hii mwingine ya nyumba amempea ngapi? 141,000. Balance? This was 318,400. That is how it should be. That is how it should be. Now we proceed now. Sir. Sasa ndio maana ingine text. That is the reason why it's an exam. So it would be direct, then at the end of it is not running now. Are we together? Now let's also come here. Listen here. Now, in partnership, when there are changes in partnership, the goodwill of the partnership should be valued. Are we together?
Yes.
And how do you value the goodwill? You share to the partners using their profit and loss what? Sharing ratio. So I love the goodwill here also. Goodwill. Kwa pamoja. And I begin with the goodwill for Mabati. What was the goodwill for Mabati? 100,000. So share the goodwill using the profit and loss sharing ratio. Yeah, we don't have. It was they shared equally. So 1:1, meaning that we watakuwa na ngapi?
Why do you get equal?
On last in the first line of the question.
Or sharing profit and losses equal?
Yes. Si nikisema hivyo hiyo itakuwa hivyo. And the number itakuwa hivyo. Number ni 40. So you balance. At the end of it, you have this one. I've said you have to value both of them. This is 616. Before making shares value. This is also 414. They should be 1490, 616. 6. This is 4. Only kumaanisha their balances have been what? Settled.
How much equally or you have to
The question.
Of
Of course, you have to even look for that. Yeah, hata ukipati tanisha hivyo hakuna mtu atakukosea. Yes. So ni kumaanisha sasa ile nini walikuwa nayo, the balances of the capital wao watakuwa fully settled. Because this is now the shares. So ni kumaanisha now if you want to know the share capital of the company, this is one of the shares that will account for. They are in shares. Are we together? Now, tutafanya hapo kwa statement of financial position. Now the other one is it is also needs us to prepare the bank account. Bank account. If I what we mean when we talk about bank. So here I will have also there is Mabati, and also Nyumba. So shillings in thousand. Shillings in thousand. And also have Mabati. That is bank account. Bank account. So generally, this is just like cash book. So I will have the shillings in thousands here. Shillings in thousands. So Mabati is the one who took the cash in hand and in the bank. So this means that the balance will down. Here, this is now in form of cash. Was amount. The one who took the 1,000. Is also the one who took the overdraft. So I will also have another balance down of bank overdraft, which was of 171. Was it 179? 179. So now let's go to additional information now. Tunaangalia only the additional information that will affect the bank. Tuende kwa additional information number 3. Mabati also raised 12% debenture of 200,000. 200,000 on passport, January 2016. When you raise the debenture, you receive the cash. So we only debenture. Kind of about 200,000. Then the same segment, he paid off the bank what? The bank overdraft. And that is because we have in the amount here. If we balance from then, it come at what you have received this money. Ulikuwa na hii deni. Yes, so the expensing card in raising, that is all the debenture expense. In raising, the 12% amounted to what?
7 million.
Sasa hapo umeraise ukainka expense, ina reduce hiyo pesa. Debenture expense of how much? 7,000. Because it's still on Mabati. And then Mabati and Nyumba also issued 1,000 shares and 15 fully paid shares of 20 each. When you issue shares, you receive cash.
Yes.
So hapa I'll have ordinary shares. So moja atakuwa na 20. Wewe ni Mabati Junior alisho ngapi? 1 million. Itakuwa 20,000. Au mwingine akaisho ngapi?
1.5.
Which is 30? 30,000. None of the companies has amortized the goodwill. Formation expenses were paid. Sasa kumaanisha pia wakalipa formation what? Expenses of how much? Huyo ni 13,000. Au mwingine? So don't have anything else. So balance.
What do they mean by none of the companies are not the goodwill?
We know goodwill should be amortized.
What does that mean?
Amortized is that ni kama the reduction in value of
Oh. Reduction of what?
of their goodwill. Ni kama depreciation of goodwill. Acha nitumie zawadi. The loss of value of goodwill. So if you balance that, wako na pesa ama bado? They have the money. Do they have any cash? In a time mingi. So we need 220, 221,000. We've seen in that yet. So hapa ni 221. This is 30,000. So what is our balance carried down? What is our balance carried down? You want to pattern ngapi? 22. Au mwingine pia 22. For the same. Debentures are just like notes. Number 4 is the ventures account. Hii ni sasa the purchasing company account. Vendors account. Huyu sasa ni Mabati na nani? Mabati and Nyumba. These are the purchasing company account. So yeah. On the vendors account, you just debit the purchase consideration. Are we together? So we have here is Mabati. Yeah. I still have Mabati here. Mabati and Nyumba. Mabati. This one I love nyumba. This one I love Mabati. Some shillings in thousands. Shillings in thousands. Shillings in thousands. Shillings in thousands. Right? So on the purchasing account, this is the where we debit the purchase consideration. And purchase consideration we already know. Right? Purchase consideration we had for Mabati is 576 and for nyumba is 459. Sio ndo wamenunua hiyo nyingine. Lakini sasa hapa walilipa hii by issuing ordinary shares. Sawa sawa. Tuanze na ordinary shares za paid. Right? Paid alipewa ngapi? Paid was issued with shares from Mabati. Yeah. Oh. So the nyumba ikampea ngapi? Ilimpea 1. Right? Off akapewa ngapi? 95. This is down. So you balance that. Okay, give your arms. Now, friend, the other one, statement of what? Financial position. This one you've already written. So, statement of financial position. You know our purchasing company? That is Mabati and So I'll just prepare it in one account, Mabati Limited and Nyumba Limited. Right. Statement of what? Statement of financial position. This is as a trend. That is the which year? As that 31st December. 31st December 2016. No, it's past January. 1st January 2016. Kampuni ikianza. Yes. So here I will have for nyumba and for mabati. This is nyumba. I will also have, mabati, sorry. Mabati and nyumba. I will have shillings in thousands. Shillings in thousands. Right? So we begin with non-current assets. Non-current assets. Mabati took over the land and lot. Building, which was Obama. Mabati took over the land and building of floor. He's also the one who took over the motor vehicles. Motor vehicles. Which is over what? 150,000. He's also the one who took the equipment. Obama. Yes? 33? No. Right? Do we have anything else? Assets. Now, within the formation expenses and what we call the expenses that you incur prior to the formation of the business. So, we talk of them as the preliminary expenses. And the preliminary expenses we were having to, and we treat them as non-current assets. So preliminary expenses, where we have the one was on the formation. Formation expenses was of how much? 13. The other one? 8. And then there was also the venture expense. This one was incurred prior to the formation of the business, which was of how much? 7,000. 7,000 was for Mabati, right? Now we go to current assets. Current assets we have inventory. Now inventory for Mabati took over the manufacturing, so it will be how much? I'm thinking this how goodwill. That was goodwill. Goodwill is intangible and current assets. B. Goodwill is an intangible and current asset. Goodwill for this one I see is 100,000. 8. You don't have to forget that. Let's now get to current assets. Inventory was of how much? Yes?
For 60,000 for Mabati.
For 60,000 for Mabati. 220. We also had the account receivables. Account receivables, we are having 128. Mm-hmm. 216, right?
Yes.
We also have the bank account. The bank account. Remember we prepared them in the
Yes.
imebaki ni hiyo bank. Bank amebaki na 22. Na huyu bado ako na 22. Get the total assets. I don't know whether we have any other assets. Can get the total assets. So what is the value of the total assets? Mhm. One. Mhm. 1,113,000.
Yes.
Hivyo. Na mwingine?
551.
Okay.
551.
551. Let's go to equity and liabilities. Equity and liabilities. Right? So for equity and liabilities, I just have the ordinary words.
Yeah.
Yes. Mabaki alipeana ngapi? 570, 600. Ndio.
Yes.
Kuna zingine waliongeza hapa. Ilikuwa ngapi? 20. Takupea ngapi?
590.
590.
600.
So hii nimechukua 570, 600 and the 20 more you issue to A limit. So itakupea 590, 600. Umeelewa mali nimetoa hiyo 570, 600 plus this 20 extra that he issued. What about nyumba? Nyumba issued 459,400. Kasoma 30,000. Which will be 489, 400. So make sure that you know this is from what? The 459, 400 plus the one that you issued for 30,000. Right? Go to the non-current liabilities. Non-current liability, which is just the what? Venture. Yeah.
Yes.
Now, the venture 200 plus the one that he also agreed on additional information number 3. How much? 14,400. Angalia kwa liabilities taken over. Venture yenye mabati alienda nayo ilikuwa ngapi? On the debit side, the ventures. Was it on mama 14,400? On business purchase account. Ya kwanza yenye tulianza nayo.
Oh yeah. 14,400.
So kuna hiyo na hii yenye aliishi.
200.
Only 214. Only 200,000 will add 14,400. You have to consider all of them. I'm supposed to
214.
na hiyo 200 ilikuwa tu ya mabati.
Yes.
So itakuja 214.
400.
Haya, na huyu mwingine
9,600.
is only 96. And when kwa current liabilities. Current liabilities, we consider only the accounts, payables, debtors, creditors. So accounts payable huyo alienda na ngapi? Bank loan to hiyo hii 14,400 plus 96,000. Ndio?
Yes.
Yeah, and then huyo nini, he also issued debentures of 2 million. This one is how much?
308,000.
308.
The other one 52,000.
52,000. Kuna kitu kingine?
Bank overdraft.
Tushamalizia.
Ilisha.
Ilisha hapa si to be settled by this 100,000. So total equity and liabilities. Niambie kama ina balance. Kama tunaangalia ngapi tumekosea. Is it giving you 1,113,000? How much is it giving you? 551,000.
Then for now,
So this is 1 million.
113.
Hapa ni kizungu. Na ujue ndo tumeanza. We get in even deeper. Na zingine utapata you have to read and understand it better. So this is also 1,113,000. Yes. So that is how that one should be done. So I want to give you one more assignment. You do as assignment. Washinda mnikumbushe you do it. May 2018 question 3, just do that. Yeah, May 2018 question 3, November 2019 question 1B. May 2018 question 3, November 2019 question 1B. You try that, and when we meet in our next class, I will check on it probably. Kama mtakuwa mmeifanya as we proceed what we will be doing next. Sawa. Are we together?
Yes.
Yes. Unless you have any question, I think we can call it the end of that class. Makuna yako na swali.